All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. So starting off as usual with the S&P 500, we're going to see that we had just a bit of a float week, very light volume, had a little bit of a downtick Monday, and then just kind of floating higher here. Not a lot of participation going on. It is the middle of August, and this type of action is generally typical. But as we get into the latter part of the month, we have Jackson Hole coming up very soon. This coming week, we also have options expiration, so we may see a little bit of volatility there. But overall, we are in the dog days of summer, and there's not a lot of participation going on right now. And I always advise caution and keeping your trades relatively small and not being too aggressive during this time period. But with that said, it is looking like we may get a melt up here. I did a video on my channel on, I want to say Thursday, and it noted that we had some similarities here from last year. It's really kind of remarkable, and this goes to show what happens when you have algos doing 80% of the trading. But so you have like this double bottom here in the June, July-ish area, and then kind of a melt up, and then a little bit of a stall out, and then a blow off top. And it's kind of, we're almost following a similar pattern. That was also after bottoming in March. And of course, we bottomed out in March this year, had a little double bottom May, June, and a melt up. And then we kind of stalled out here for the month of July, really. And now we're into August, and it looks like we may be going vertical. So you guys know that, and by vertical, I mean, something like this, some type of a blow off move. And you guys know I've been talking about this for a while here, that I'm not convinced that this market will top out until we see that. I've talked about this level on the VIX. I've talked about how we should have another low in the VIX, I should say. And once we get there, I'll probably add to my position more aggressively, but we're not there yet. And yeah, it looks like we're getting that leg down. So we may have a one last final push here in the equity markets, but until then, the trend is up and we have to respect it. Some other things, though, we can talk about here. Let's just start off with crude. So I believe actually Jason did a video last night, and actually echoes my sentiments here. So he was talking about China imports decreasing, and without a demand increase, it's going to put pressure on oil. And you guys know I've been talking to you about this double top here in oil. I'll just clean up these lines here. But you guys know I've been talking about this double top, and the Chinese imports started to cut off back in March and February, and as you see, we got this one last move here, and now it's into double top, and it has pulled back since then. And really, I see that continuing at least for a few months now, as the reopening trade stalls out, as the travel itch is over with. A lot of people are traveling right now. That was putting upwards pressure on the price of oil. And as we come into the fall, where naturally travel starts to slow down, and when we have the CPI numbers just absolutely exploding, and as we know, that doesn't even account for the real inflation numbers in the economy, but nonetheless, consumers are going to come to a point where they need to tighten the belt. They may go out and say, well, instead of going on a full week vacation, I'll go take 4 days, or instead of buying all these snacks at the grocery store, I'm just going to get the essentials. And that's going to put pressure on oil. It's going to put pressure on the economy in general. So that's kind of what I'm seeing here as a bit of a preview for the fall. And I do think that will put pressure on the energy markets moving forward. Doesn't mean that we have a massive sell-off, but I don't see oil making a new high in the near term. But anyways, we'll move on here to gold. But anyways, let's move on here to Bitcoin really quick. So looking here at Bitcoin, again, I just want to touch on sentiment a little bit here. Again, we talked last week about how everybody's getting really bullish again on Bitcoin. And just as a trader, that makes me a little nervous about the price action. If we do a simple Fibonacci retrace here from the all-time high, and we just bring it down, actually the low is right about here in middle of June. You can say we hit a 50% retrace, but if we get to that 618, that would coincide with the resistance area that I gave you guys last weekend. So I said we'd probably get up to 50,000, and we may even backtest this trend line or whereabouts. And if you notice, the 618 seems to coincide with right about where that trend line is, maybe a little bit higher, give or take. But if we push up into there, that's going to be some serious resistance for Bitcoin. And with sentiment as bullish as it is on crypto in general, that makes me feel like that will hold. Now, I just want to point something out. So if you look at a longer term chart of Bitcoin, you can see it went parabolic. But let's just go back here and we'll just look at another parabolic chart. So I'm just going to look at the NASDAQ 100 here. And if you look back, clean up the lines here. If we look back here on the monthly time frame in 2000, we basically, we had the initial sell-off and we went right back up to a 0.618 retrace before dumping back out. Now, I'm not saying that Bitcoin's going to go, have a collapse like the NASDAQ did, but it's not uncommon for a equity or an asset to go parabolic and then come back up to a 618 or a 50% retrace and then continue the down move. So that's usually the buy the dippers coming in saying, oh, all you got to do is buy the dip. And yep, you just buy the dip and it always works. And then eventually it stops working and the market corrects and mean reverts. But just wanted to point that out there. Again, still no position in Bitcoin. So, just take that for what it's worth. But I just wanted to point that out because I'm seeing sentiment just get uber bullish all over the internet on crypto. All right, so let's go. We got to talk about gold and silver. Right after I did that video last week on Sunday night, we dumped out on gold. I did a video Sunday night as it was happening. And yeah, so this is a pretty epic dump here. Let's put the lines back. So we got right down to double bottom and really having a nice reversal off the lows so far. I want to see gold do a little bit more, but this weekly chart pattern looks very good, at least for now. This is a really nice test candle on the weekly time frame. There's going to be a lot of support in this range here. Now, I do want to see gold firm up a little bit more before I do anything swing trading wise. But as of right now, this is a nice reversal, and we'll leave it at that for now. The only thing that I see that is a problem is the GDX is still kind of hovering near the lows. We had a nice day on Friday, up 2%, but I want to see the GDX push higher and really take leadership. When we see the GDX leading, that's a bullish indicator for gold, and it's usually a leading indicator. In fact, GDX bottomed out in March a little bit before the price of gold. If you notice here a little bit, gold was stuck down on the 8th, made its low, and GDX really made its low on the 3rd, and then it started to inch up here. So you want to look at the GDX as a leading indicator there. And yeah, if it can firm up, if we can get some type of sideways action here, that is telling you that it's consolidating to move higher and attack these red bars here, and eventually this 1828 pivot. But for right now, it's a nice reversal, and we'll just leave it at that. By the way, sentiment on gold right now is pretty much exactly where we want it. Everybody's hating on it. And again, I try to, it's almost like crypto and gold have an inverse relationship at this point, because everybody, as crypto rose this past week, gold dumped out. And it's almost like money flowing, from one sector to another. But the sentiment on gold is absolutely just, it's getting pretty bad right now. But, lest we forget, if we just flip over here, I mean, a 1 ounce gold coin now is 1770, and in 1933 it was 2067. And I mean, by the way, Market Sanity is a great follow on Twitter, and he has a great website for gold, silver, and investing news. But yeah, and gold is an inflation head. Don't let anyone tell you it's not. In fact, if you divide the S&P 500, or if you take the 50-year returns of the S&P 500, go back to 71, where it is now, we've got about 450% gains. And if you look at gold, it's actually closer to 500% from 1971. So don't let anyone tell you that gold isn't an inflation hedge or gold is old. Just look at the numbers and they speak for themselves. So gold will be fine long term, but in the near term, we just want to see it firm up a little bit more, and maybe we can get a swing trade in. Maybe we can jump onto some miners or some wheat and precious metals and make some money there. But we'll wait for a pattern here, and we'll just see what it does for us. Silver, kind of the same deal. Again, I've talked about how silver is a little bit stronger, a little bit less of a rebound this week, but that makes sense because it was a little it wasn't as oversold as gold was, but you have these higher lows in place still here. So 1, 2, 3 higher lows, basically a test of the 100 moving average. So silver holding up here, silver can actually make a move. If it holds up, it may, we got to look for pattern, but this is something we may look to get into because I do like those higher lows there. That's a very powerful signal on the chart. But yeah, anyways, let's just quickly go over the dollar index. So dollar coming back in and probably helping gold with that relief rally on Friday. But again, the dollar strengthening up, so that was probably also putting pressure on gold earlier in the week. But as we can see here, I've got these lines drawn on. I think once we get through this pivot, it's going to be really hard for the equity markets to continue higher. But we have a series of potential higher lows in play. I have this potential trend line here, and we have the 50 moving average upsloping on the daily time frame. So if we make a higher low here on the dollar may want to make another leg higher. So just keep that in mind as far as the equity markets are concerned. And again, coming into the fall, I think there's going to be lots of pressure. Again, we talked about demand with energy and so on and so forth. The reopening trade is basically over with, and I think the market has to look forward to the winter and the fall, as well as the fact that there's not going to be any stimulus checks going out anytime soon, although there was the child tax credit, so that may help keep things afloat in the near term. And then really quickly, we'll just go over the yield. We haven't talked about that in a while, but you guys know I've been talking about Jackson Hole being a potential pivot point for this, and I've been really patient on getting into any sort of yield play here, but I do think there is a potential another low in for yields, and I think that will be right about this 618 here. So we talked about the Bitcoin golden ratio 618 earlier, and we saw that on the NASDAQ as well, as I pointed out. And you're hitting this, you would be also hitting this whole round number of the 1% on the yield. That would also probably push sentiment to right where I'd want it there. But again, just to give you a little bit of an update there, this is still just consolidation in my opinion on yields. I do think they will move higher going into the fall. And nice little bounce here, but then hitting the 50 moving average on the daily. I do think there's a potentially another flush lower in play, and we do have that Jackson Hole meeting. So maybe nothing happens immediately, but it may take the market a little while to digest that. I mean, we're only a week away from that. So it's probably not going to get down to 1% that quickly, barring like a complete meltdown. But just wanted to give you guys a little bit of update there as far as that is concerned. But anyways, just going to wrap it up here. If you guys want some more information on swing trading and analysis, follow me on Twitter or on YouTube at Aaron Basil. And I post daily updates and charts. So if you're interested in that, come check me out. But anyways, you guys take care, and I will see you next week on the chart.